So I co-covered the energy space, but I cover all market cap sizes as far as the individual companies in my analytical role. It's on the portfolio management side that I'm more of the small caps.
So there's opportunities here, and so there are some stocks that you like. As far as we were going to promise some that you don't like, but what you're really saying is the whole universe of companies that are over leveraged are the ones that you're worried about because they have trouble through downturns.
Sure, because you've got two things going on. The business itself inherently has the leverage to oil prices.
Yeah.
So you have that on the downside as we sit today. If you combine that with financial leverage, right, it's a recipe for disaster.
Do you have any that are the worst? I mean, do you have a couple that are, I don't know why I want to do the worst, because then we'll do the best, but are there any that are really over leveraged that we should
there's know? Definitely a few out there, but given our
not buying those.
Given our quality bias and everything, we just avoid those and stay away from them.
Right.
We don't fish in that universe. We don't short anything. So other than that, those would have been the candidates we would pick to short them. But
in large cap, I'm going to start with this one because I just like the symbol. Remember in the old days, we used soda and stuff like that. So this is Diamondback Energy.
Right.
Symbol, FANG.
Exactly.
Because of rattlesnacks.
Yeah.
Diamondbacks, right?
Exactly.
Yeah, okay, so Diamondback
because
Energy.
they have a subsidiary that owns the mineral rights called Viper.
Oh, cool. That's cool, too.
And that symbol is Venom, V-N-O-M.
It is?
Yes.
Wow, those are two great ones. Anyway, this has nothing to do with technology, obviously. Why do you like...
Maybe it's just been sold off like the technology stocks.
Yeah, maybe. There's only one A here. Diamondback Energy and Pioneer Natural Resources are your two big cap picks. And you figure both of those are at a point where you buy them right now?
Absolutely. We think the pullback in oil prices has... I won't say it's been overdone. There's certainly some fundamental reasons why it has happened, and your earlier guest had alluded to them. But at this level, we think those stocks are discounting oil in the mid $40 range.
Really?
And so we think just to get to the current price level, there's at least 20–25% upside for the stocks to discount that value. Longer term, we see oil prices settling in the 60s. And we think these stocks have tremendous upside.
All right, let's do the small caps. Callan, WPX, and Centennial Resources. Are they all, I mean, you just specific fundamentals to any of those individually, or those are the small caps that you like in this arena?
Those are the ones that we like in this arena, but the reason we like those stocks is that it's just not an oil bet. Really, there's specific things going on fundamentally that these companies are doing.
In each one of them?
In each one of them. In Callan, they just had a great quarter. They raised their guidance. They're going to see cash flow neutrality next year, which is something we like. And then from then on, they should be able to grow production at double-digit rates and generate cash. WPX was a company that used to be in 12 basins. They've narrowed it down to 2, so they're really focused. They're really driving results. It's one of the best management teams in the business. They were a little bit over leveraged. They've gotten down the leverage in an area where we're very comfortable with it, and they should generate free cash flow next year. Centennial's a little different. They're a faster growing company. They won't generate the free cash flow. They're run by a gentleman named Mark Papa, who ran EOG Resources and took it from a small cap when I owned it in 1997 to a mega cap today. And we think he can replicate that in the Permian with Centennial.